What if the real secret to making more money isn't just about how hard you work, but about what you already own? Today, we're going to dig into something called the asset barrier, this hidden connection between wealth and opportunity. So let's jump right in.
We've all heard the story a million times, right? Work hard, get good at what you do, and you'll succeed. It's the classic dream of meritocracy. But what if there's this massive piece of the puzzle that we just don't talk about?
So we tend to think about income as this simple formula, your skill plus your effort. But it turns out the reality is a little more complicated. There's a third, and honestly a critical piece to that equation, assets. Yep. And this is the one factor that can either, totally supercharge your talents or keep them locked away, gathering dust.
Okay, so let's break this down. What exactly is this unseen head start we're talking about? All right, here it is. This is the big idea, the asset barrier. And let's be super clear, this isn't about someone lacking talent or drive, not at all. It's more like a structural wall, a wall that really talented people smash into when they just don't have the capital, the money, the property, the resources to actually use their skills and turn them into something.
And the source material we're looking at puts it really well. It says that for people born into wealthy families, their high standard of living isn't always because of their own skills. Nope, it's because the assets they start with, well, that's what opens the doors. It's all about access, really.
Okay, let me give you a really simple example. Imagine you're the most skilled artisan, maybe a brilliant woodworker. You've got all the creativity, all the knowledge. But if you don't have the money for good tools, quality materials, or even just a place to work, that incredible skill, it can't actually make you an income. See? That is the asset barrier, right there in front of you.
So a big question is, how did we even get here? Well, this gap, it didn't just pop up out of nowhere. It's got some really deep historical roots. Let's take a quick look back and see how this all started.
If you look back through history, you can see this pattern really clearly. It goes way back to feudal systems, where land, which was the main asset, was all held by a small group of nobles. Then you have colonialism, where huge amounts of wealth and resources were pulled from around the world and piled up in empires. After that, the Industrial Revolution comes along and creates this brand new ownership class, and they just accumulate these massive fortunes. And now in our modern era, well, that wealth just gets passed down from one generation to the next, cementing that head start for their kids.
And what that history created is this powerful cycle. It's a cycle of inequality that basically feeds itself. Once a family has that advantage, it's really hard to break.
And here's how that feedback loop works. It's pretty straightforward, really. Step 1, you inherit assets. That money then gets you into the best schools. You get access to powerful networks. From there, it's a lot easier to land high-paying jobs. And then, the income from those jobs plus the money your original assets are making for you, well, that just builds an even bigger pile of wealth to pass on, and boom, the cycle starts all over again, but even stronger this time.
And this chart, wow, it really paints a clear picture. Look, for your average wage earner, pretty much all of their income comes from their labor. They're trading their time for money. But for an asset owner, a massive slice of their income can be totally passive. Their wealth is literally out there working for them 24/7. And that, right there, creates two completely different economic worlds.
So, okay, if hard work alone isn't always enough, what does this mean for society as a whole? And more importantly, is there anything that can be done to make the playing field a little more level?
And this right here really gets to the core of the issue. The source points out that if how much you earn depends more on what you inherited than what you can do, well, the whole idea of a meritocracy starts to fall apart. Think about it. How can it be a fair race if some people get to start 10 feet from the finish line?
So, what are some of the potential solutions being discussed? Well, the source material brings up a few policy ideas. You've got things like progressive taxation, land reforms, and this one is really important, making it easier for people to get affordable credit. The idea is to create pathways so that skilled people without a ton of assets can actually get the resources they need to invest in themselves.
All right, let's zoom out and pull this all together. When you boil it all down, what's the big picture here? What's the main takeaway?
This table really lays it out side by side. On one hand, for the asset-less, your reality is mostly about earning wages from labor. Your opportunities can feel limited by that lack of capital, and it's easy to get stuck in a cycle of disadvantage. But on the other hand, for the asset-rich, their reality is often fueled by passive income. Their opportunities are boosted by all the resources they have, and they benefit from a cycle of privilege. It's literally two different economic realities, and the dividing line is assets. So if there's one thing to take away from all this, it's this. Your ability to earn isn't just about what you can do. It's not just about your talent or your hustle. It's also about what you already have. Your potential is tied not just to what's in your head, but what's in your wallet too.
And that really leaves us with a huge, fundamental question, doesn't it? In a world where your starting point can have such a massive impact on where you end up, what does fairness even mean? What would a truly level playing field actually look like? That's definitely something to chew on.